Good morning, everybody. Hey, welcome to Tuesday, November 10th. And sorry I wasn't with you yesterday, enjoying some time with the grandbaby up in Tennessee for her baby dedication. So glad to be back in the office today, glad to be back with you and looking at what's happening in the marketplace. Hey, before we do that, though, let me remind you that if you go to my website, I've got a webinar that we did before the election that still applies to even today. If you'll go to my website, statlerfinancial.com, under the events tab, you can click on there and look at the replay of that webinar we did. A lot of good information there. It applies even with where we are right now. So I hope you'll take a look at that as we get ready to look at yesterday's Blockbuster Day. And let's see what Dave has to say and what Dave thinks maybe is going to continue. And of course, I'll pitch in and add a little commentary too. Hey, next with Dave.
5.7 morning. It's 8:40 here, 20 before 9. We promised you we'd be back yesterday morning. Yes, and it is. Time to check in and find out what's going on Wall Street this morning after what could best be described as a raucous day on Wall Street yesterday. Let's go check out the offices of Statler Financial Services, where Phillip Statler is back in town. And boy, am I glad you're here, Phillip. Good morning. How are you?
I don't know, man. It seemed like you did a pretty good job yesterday. I mean, daggum, Blockbuster Day on Wall Street.
Boy, sure did at the outset. And I was telling you while we were off the air, I'm kind of proud of myself. I kind of started out things saying, hey, this is irrational exuberance. The Dow and the S&P both opened up at all-time highs after we just ran things through the roof when Pfizer made their big announcement about a successful coronavirus vaccine. I kind of said, okay, there's going to be some shifts in emphasis, there's going to be some action, and don't expect this kind of uptick to continue forever. Well, it lasted less than a day, and we ended up with a big gain on the Dow. That was up by almost 3%. S&P was up by a little over 1% at the end of the day. NASDAQ ended up actually taking a dive down 181 points yesterday, and you're kind of racking that primarily up to the sector shifts we alluded to, the businesses that are benefited greatly from the pandemic, now getting sold off, and the ones that got whacked during the pandemic are being bought, right?
Well, that definitely seems to be what's happening, Dave, because you look at a lot of the sell-off in the NASDAQ has been those type of companies that would benefit from staying at home workers, which makes sense, right? Because they've had a big run up in the last 6 months. So those guys are going to be the ones that are going to get rotated out of as they start looking at what's the next sector, where are we going for the next 6 months to a year, and let's rotate into that sector. I don't know that we found that sector yet, but definitely we saw the sell-off of the stay-at-home sector.
Absolutely. I was commenting yesterday morning, my big winners and losers list. The big winners were all the companies that have been absolutely whacked during the pandemic, and the big losers were mostly the stereotypical ones like Zoom that were really beneficiaries of the stay-at-home trend. I guess what surprises me is the size of the NASDAQ sell-off. The 181 points down yesterday, and we're still showing a continued trend on that tech-heavy index. It's even a little bit more of a sell-off than I honestly expected.
So yeah, if you think about it, I mean, it was probably about double the Dow Jones gain, right? So they lost 1.5%. The Dow was up almost 3% at the close. But let's face it, the S&P 500 and the Dow, though they hit all-time highs during the day, they didn't close there. They closed well off the highs of especially the Dow and the S&P 500. Both of them very far off of the highs for the day.
Absolutely, and some of that I think you can probably guess pretty strongly on. I mean, if you're one of those guys that throws gobs of money around inside the day, you see the Dow and the S&P opening up at all-time records. You say, okay, fine. There's a big step from a vaccine to vaccination. So they saw that run up and they said, quick, get me some profits. When I see things settle down, I can put money back into it.
That's right. Hey, let's take profits now. I can go home. You know, the day is done. I can get done early and go home and enjoy my family and then start all over tomorrow.
Now, that was kind of what ended up happening yesterday. I mean, it's hard to complain about an 800-point gain on the Dow because that's something that's party time anyway. But when we were looking at like 5.5% increases at the outset of the day, you kind of got your hopes up for a second, and you knew in your head this wasn't going to last.
That's right. And as you and I continue to talk, maybe we're talking everything down a little bit here, but the Dow's definitely falling as we speak, and from where I first started following it this morning.
No, geez. Well, let's stop talking it down and figure out what earnings season is looking like, shall we? Bunch of earnings reports out this morning. Anything going to help things stay up there this morning so far?
You know, even though we've got some companies that did well, we're still seeing some give back. Now, not in everything, like D.R. Horton. That's the home builder. They beat by about 50 cents a share. And forecast, their earnings were ahead of expectations. You know, they closed more sales. Their net orders were up. They raised their dividend. I mean, they had a lot of stuff going, and they gave an upbeat outlook for 2021. So they've been up as high as 3% this morning. They're off of that just a tad down, up 2.8% right now, but still a good start and a good signal for the home buying group.
Certainly wouldn't turn that down as the CEO of any company, right?
No, definitely not. We had a cybersecurity company, CyberArk Software. Now they're a German company, so we don't have any futures on them right now. But they beat by 2 cents a share. Revenue though was a little short of Wall Street expectations, and so they're down about 6% pre-market. I don't have any trades right now actually coming out because it's on the Frankfurt Exchange. So it closed down 7.5 last night. So not benefiting too much for that one. Advanced Auto Parts. Now they're one of those sector rotation stocks. Okay, they beat by 15 cents a share, and revenue beat also, but you know, they benefited from the stay at home, do it yourselfer. Hey, I've got time. I'm going to fix up the vehicles. Well, that rotation out is what's happening now. And so they're being one of those companies that are being affected by that. They're down about 3.75% this morning.
I was wondering if they had bad news on the earnings front, or if we were seeing a sector rotation effect on them, because they're on my big loser list this morning.
And then we had Simon Properties Group. Now this one, they own a lot of malls.
They were one of the big run-ups yesterday too, the big mall owner.
Well, they reported a profit of 48 cents a share, which they were expected to make 90 cents a share. So a big miss for them this morning. Revenue missed as well. You know, because of COVID-19, the retail tenants paid lower rents, which obviously didn't help them any, and they're trading down about 4% this morning. And let's face it, the run up yesterday was because of people getting back out, shopping the malls and that type of thing. So that was why we saw a big run up yesterday. We'll be interesting to see if we continue to see that get chipped away at over the next week or so.
Yeah, it's interesting because there's so much chit chat about, you know, the future of malls in general and whatnot. Simon, of course, being the company that's going to be the beneficiary of a big uptick or the victim of a big downtick as to whether or not they can bring the stores back to the malls and renegotiate those rents back up again. That's going to be kind of a question mark of the future of the big mall ownership companies all along for the next, probably year or so.
It will be. And let's remember that Simon, and I can't remember who their partner was, is the ones that are trying to buy JCPenney's out of bankruptcy.
Oh, that's right. I'd forgotten they're one of those partners, aren't they?
Yeah, they are. Hey, the last earning I have for you today is in the travel industry, Norwegian Cruise Lines. They came in, they lost 10 cents more than expected. So they lost $2.35 a share. Revenue was below expectations, as we all can imagine. But a little brightness in their future. They say that especially in their second half of 2021, their cruise reservations are going up significantly. Obviously, they had a great day yesterday, up almost 27%. Today, they were up about 3% earlier this morning. They've given most of that back up this morning. They're up about 1/3% right now. So
kind of interesting. I'm noticing that Carnival is holding its status as toward the top of my big winners. They're still up over 4% in pre-market trading this morning.
Are they? Well, Norwegian, maybe it's a combination of their report and sector rotation, but both of those things are giving them some headaches there. Hey, I got one more thing. It's not an earnings report, but it is a significant headwind for a stock. Beyond Meat. McDonald's announced yesterday that they have developed their own meat alternative burger. And so they've been using Beyond Meat. So that means they will be giving up on Beyond Meat and doing their own thing. And so that has a huge impact on Beyond Meat. They're down 21% this morning.
Ooh, that hurts. I saw the news item and I keep thinking, am I going to go up to the drive-thru and I'm going to ask for a McPlant?
And maybe that's what the new one's going to be called.
I think that's what I remember it being called. I just have trouble wrapping my arms around that. I mean, I never say never because the longer I live, the less I know for sure. But my first reaction was driving up to a fast food place's drive-thru and asking for a plant burger. Oh, geez, okay. We'll find out how well it works for McDonald's and hope that Beyond Meat survives it. Setting the table again, mixed bag yesterday after party time at the outset. Dow was up by the better part of 3% yesterday. S&P was up by over 1%. And the NASDAQ, just to keep things even, went down by 1.33%. 45 minutes before we open this morning, Phillip, what are we looking at this morning?
Hey, we got a mixed bag today, Dave. The Dow is up about 0.5%. That's a little bit of an improvement over the last 2-3 minutes. It had gotten down to about 1/3% up, but it is bouncing back up now. We got the S&P 500 down 0.25%, and we've got the NASDAQ down about 1.5% again this morning before we get started. On the commodities front, we've got some green across the board there. We've got silver up 2.4%, and we've got gold up 1%, still way off of their highs of the year. And then crude oil is trying to get back to where we like it to be. It's up 1%, $40.70 a barrel right now, Dave.
It actually maintained some of the gain it got back yesterday during the party session because crude oil was one of the benefits as they expected more economic activity. I'm glad it's staying slightly above 40 anyway.
Yeah, exactly. And we are glad that, and we'd like it to move back up about 45 would be good.
Yeah, that's a safe maximum. That keeps us happy at the gas pump and keeps the oil flowing in the oil fields out in Texas. World markets, everybody's green. Asia was getting a little bit more reticent about things, but they were green ink when they closed early this morning. Great Britain's still having party time. Their markets are up by better than 1.25%. Germany is up fractionally midway through their day. Overseas markets. Phillip, keeping tabs on where the risk is in my portfolio. This, for the last 24 hours, good reason why day trading is always a risky thing to do. When I'm looking at my retirement, I want stability, but I still want growth. How do I find you to find that?
Then give us a call at 863-382-0037. Then go to my website, statlerfinancial.com. Hey, under the events tab, Dave, I actually have a webinar rebroadcast that they can go and watch. I did it before the election, but a lot of what's on there applies to what's happening even now after the election. So go to the website, statlerfinancial.com, under the events tab, webinar replay there you can catch up on. And then join me this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty, and back again tomorrow morning here with a snapshot as to what's likely to affect our money tomorrow. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day. I'm looking forward to tomorrow.
You do the same. Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining me today. Remember, statlerfinancial.com, events tab, a webinar replay is there that we did before the election. A lot of stuff there applies to even what's happening now. So catch up, go watch the webinar. Catch me tomorrow morning right here, same time, same place. Have a great day.